Barlow from InvestorStream. Let's delve deeper into the rare earths market. The global focus on clean energy continues to propel the rare earths market to new heights, and as the world's reliance on China's supply gradually eases, it opens up opportunities for other mineral-rich jurisdictions to fill the void. The upward trend in rare earths prices is expected to continue through 2022, and in the longer term, the International Energy Agency is forecasting demand to potentially increase by as much as 3 to 7 times. Rare earths are a set of 17 metallic elements that occur in similar oxides of metals and are widely distributed but relatively scarce. They are used in a number of products across a wide range of tech sector applications, but most importantly, electric and hybrid vehicles require rare earths for high-strength magnet production. With the shift towards decarbonisation and the role of electric vehicles in this thematic, rare earth demand will continue to grow. Fortune Business Insights has reported that the market is projected to grow from approximately $2,800 million in 2021 to $5,500 million in 2028 at a compound annual growth rate of 10%. Demand in the magnet application sector is forecast to increase at the highest rate of all rare earths. Neodymium and praseodymium are the metals that are set to benefit the most from the rare earths boom. These metals are used for the manufacturing of high-strength neodymium iron boron permanent magnets. There are projections that automotive demand alone for rare earths will rise by 25% in 2022. Additionally, China is anticipated to become a net importer of NdPr by 2025, with China's demand poised to exceed total global production, leading to further price increases. Far East Capital Executive Chairman Warwick Grigor said there were a number of key factors behind the rare earths price remaining elevated.
As the rest of the world looking for alternative sources of rare earths, you've got China getting to the point where their own production is starting to meet speed bumps, and they're looking to invest in projects outside of China so they maintain their dominance of the industry. So there's a lot of pushing and pulling and geopolitical factors to consider. Really, you need these higher prices.
Developed countries such as Australia and the United States have targeted rare earths as priority metals as they progress towards net zero. The Biden administration outlined an ambitious climate and technology policy that will support the need for increased supply of rare earths. The newly elected Australian government has identified it as a strategic industry and is expected to come under increased pressure from the Greens and Teals to adopt stronger climate action goals.
What the world needs is refineries and alternative processing facilities for those concentrates to try and compete with what China's doing. While they have a stranglehold on the rare earths supplies, they're buying concentrates. It's not all coming from their mines. They're buying concentrates and processing it.
In this strong growth market, Lindian Resources has reached an out-of-court settlement regarding their dispute for Lindian's proposed acquisition of up to a 75% interest in the Kangankunde rare earths project located in Malawi, Africa. This announcement has seen a positive impact on Lindian's share price in anticipation of the exploration and development that will be conducted over the coming months. This activity further supports Lindian's vision to build a respected minerals group through astute asset selection and is highly complementary to the company's existing bauxite assets in Guinea.
Well, the bauxite assets are good, valuable assets, but there's a less certain time frame and route to turning that into money. So that'll continue in the background, but the rare earths is what the market wants to see at the moment.
In addition to these factors, Malawi is a highly regarded country that has a stable democracy and well-established transport and power infrastructure. The Kangankunde project is one of the largest rare earths projects outside of China. The deposit is a large rare earth carbonatite system that rises up 200 metres above the surrounding plain and has extremely low thorium and uranium levels per rare earths deposit.
Now, the grade of their project is the special feature. There's I think the resource figure is 107 million tonnes of 4.24% rare earths. That is very high grade. You've got a lot of projects that are talking not percentage, but parts per million. If you look at something like Ionic, they're talking 530 odd million tonnes at 640 parts per million. Well, 1% is 10,000 parts per million. Lindian's got 40,000 parts per million compared to Ionic at 640 parts per million. So it's a massive difference. Sure, there's different metallurgy that comes into it. Grade alone's not the only thing you look at with rare earths, though. You've got to look at processing, the metallurgy. Is it refractory? Is it sedimentary? There's all sorts of things like that. But to have something that's 100 million tonnes at 4.24%, that's probably the sweetest project out there.
This asset's compelling NdPr geology, combined with the ability to use simple processing techniques, provides a significant level of appeal for investors who are seeking exposure to a strong growth market segment. With solid fundamentals and the potential for further announcements as exploration commences, shareholders will be closely following Lindian Resources.